All right, you magnificent market mavericks. Big Money Mike here, coming at you hotter than a tariff tweet storm at midnight. Welcome to the Market Mindset Podcast, where we turn Wall Street chaos into cold, hard clarity. It's April 7th, 2025, and let me tell you, the markets are swinging wilder than a pendulum at a Trump rally. We've got China slapping 34% tariffs on U.S. goods, rocket companies blasting off like a SpaceX launch, and Jim Cramer preaching patience like a Zen master. Buckle up, this episode's got more twists than a Beijing trade negotiation. Let's kick it off with the biggest headache of the week. China just retaliated with a 34% tariff on all U.S. goods. That's right, they're hitting back harder than a kangaroo with a vendetta. Why it matters: unemployment uptick. U.S. jobless rates ticked higher despite 228,000 new jobs added. It's like hiring a chef while the kitchen's on fire. Commodity carnage. Oil prices tanked as OPEC Plus promised more supply, and gold fell 2% to below $3,100. Even the shiny stuff can't catch a break. Retail reckoning. Best Buy and Nordstrom got downgraded faster than a TikTok influencer's credibility. Meanwhile, Ford and Stellantis are throwing employee discounts at everyone like confetti. If you've ever wanted a new car for the price of a used scooter, now's your chance. Next up, rocket companies, the mortgage maestro that's up 40% this quarter. How? By pulling more strategic moves than a chess grandmaster. The rocket fuel, special dividend, 80 cents per share, cha-ching. Acquisition spree, snatching up Mr. Cooper and Redfin like Black Friday deals. Tech turbocharge, new AI-driven products, and a shiny rocket Visa card. Jim Cramer called their FTC strategy brilliant, using regulators as a wrecking ball to clear competition. With a 67.77% total return over 3 years, RKT's proving that even in a tariff tornado, some stocks just keep climbing. Our boy Jim Cramer is out here playing market therapist. I'm not going to panic. I'm not going to say, get out now. Translation: stay calm, but keep your wallet closed. Cramer's wisdom: wait for Europe. If the EU retaliates, that's your buying window. Time horizons matter. If you need cash within a year, maybe sell. Otherwise, ride it out like a cowboy at a rodeo. History lesson: the S&P bounced back after 2008. By 2013, you were back, he says. So see you in 8 years? Meanwhile, Trump's out here comparing tariffs to taking medicine. Unpleasant but necessary. Sure, Mr. President, but this medicine tastes like economic cyanide. Time for my hot take. I'm doubling down on rocket companies. Here's why: P/E of 15.2. Cheaper than a used Tesla. Dividend delight. That special 80 cents payout is sweeter than a maple syrup 4 drip. AI edge. New tech leadership could automate their way to mega profits. For you options daredevils, grab a rocket company's October 2025 $30 call. It's riskier than betting on Trump's Twitter feed, but if tariffs don't ground this rocket, you'll be orbiting the moon. Brace for volatility whiplash. S&P 500. Flat to slightly up if Europe holds fire. Defense stocks, utilities, healthcare could shine. Dow. Industrials like Caterpillar might bounce on infrastructure hopes. Nasdaq. Tech stays shaky unless Meta finally releases Llama 4. Watch for retail fallout. If Target warns about passing tariff costs to consumers, the sell-off could resume faster than a TikTok trend dies. That's all for today, you beautiful bulls and bears. Remember, in this market, you gotta be as nimble as a cat and as patient as a saint. Stay sharp, stay savvy, and may your portfolio be as unstoppable as rockets rally. Big Money Mike signing off. Catch you next time.